Well, the inflation print is in, and the market behaved a little bit strange. Let's talk about it. Good evening, my fellow traders in the market. This is Chris with Riz International, and this is your weekly market recap. And it was a very interesting week in the market, to say the least. There's a lot of stuff going on that we need to talk about. And just kind of as a quick recap, last week we talked about this 3,900 level being incredibly strong as far as resistance. And the market proved me right. Going through Wednesday, it was quite the downward move on the S&P 500 this week until we hit Thursday, and we kind of found the bottom and we rebounded. But probably the biggest, surprise was that, the CPI numbers came out on Wednesday. They were higher than projections at 9.1%, and that's what people are using to, gauge inflation at this point, which is the consumer price index. And that happened on Wednesday. We had quite the sell-off initially, but a huge rebound, and then a push back down below 3,800. So it was very strange. And then, honestly, I was expecting, because the last time we had this, it was kind of one of those things where, we had a pretty wild day, to say the least. And, the next day is when things really went south. Well, it didn't quite happen that way this time. We had a big sell-off on Thursday, which was the day after the print, but a lot of buying pressure down here. A lot of people buying the dip, and that continued into Friday's close. A very strong green day, but that 3,900 level is still looming, waiting there. It's been pretty wild. And David, I will get to your question. Don't worry about it. We will talk about that here when we get to the Q&A section. But quite the rebound here. And there's some interesting things to kind of look around at, things going on in the market that we don't necessarily talk about all the time here, but things to consider. Right now, approximate mortgage rates are about 5.5%. So that's going up, and there's quite a lot of talk surrounding the Fed and the next rate hike, and they are talking 100 basis points. We always, Riz was saying it'll never happen, but as the CPI continues to push higher and higher, Fed's got to do something, and interest rates is what they can do. That's pretty much their only option at this point, and so more than likely we should see another interest rate hike later this year, and they're betting over 50% at this point. It will be 100 basis points, otherwise known as 1%. One thing that's been happening that's very interesting lately is the strength of the U.S. dollar. Now, you would expect with inflation that you'd be like, oh, well, the dollar's getting weaker. It actually isn't. The U.S. dollar is incredibly strong right now, and I wanted to bring up this currency pair, which I know we typically don't look at, Forex or anything like that, and we're not suggesting you trade it, but I wanted to show you the parity right now on the U.S. dollar and the euro. For the longest time, the euro has always been stronger than the U.S. dollar. Right now, they're basically at a 1-to-1 parity right now. And, with the euro being slightly stronger, but only by a hair. And this kind of shows you how strong the dollar is right now compared to the euro. And something definitely to keep an eye on as we move forward here, because there's a lot going on. Earnings season is going to start next week. So we are going to be seeing a lot of earnings reports coming out, and that will be with the increased price of fuel that will be put into people's earnings, especially if they need that fuel to run their business. So that should be something interesting coming up. And also, there's going to be the Q2 GDP release at the end of the month. Now, if you remember, Q1 GDP was negative. It had been the first time it had been negative in quite some time. If we get another negative GDP print at the end of the month, that will signal a recession. That is the textbook definition of what a recession is. Now, a lot of people like to say we're already in one, but the truth is we really have to wait for that print before we can go ahead and declare to the world that, yes, that's what's happening. So these are some key things that we're going to be keeping an eye on here, especially earnings seasons. I know Riz is going to be making a lot of plays for that for all of our elite members, and if you are, make sure you're ready to go and you have your cash ready, because I know Riz has some plays in mind that he should be releasing to all of our elite members here fairly soon when he gets into those. So be ready for that. as things are incredibly volatile typically during earnings seasons. And I suspect, like I said, there may be some rough reporting, just to say. So we'll have to see how that goes. There was, of course, a lot of talk about the CPI number, also including the increased price of fuel. And so they're saying, well, maybe the next CPI print will be lower because, fuel prices have gone down. But the question is, how long will that be maintained with everything going on in the world? Let's go ahead and take a look here at the breakdown for the S&P 500 right now. Energy taking a bit of a hit this week. As you'll see, the price of oil somewhat tumbled a little bit, and we actually did make a play on that we'll discuss here in a little while, but still sitting pretty at almost plus 20% on the year. Everything else is in the red at this point, which is not overly surprising. The S&P 500, represented here by the SPY ETF, sitting right close to that negative 19, negative 20% area, which is where it has been for quite some time. Utilities and healthcare still below the zero line, but overperforming the S&P 500. Healthcare only down 6.6%, and utilities really close to that zero mark, sitting at negative 1.5%. Financials, real estate, health, or tech, all below the S&P 500 right now, or the SPY ETF. And so, yeah, those sectors are getting hammered pretty bad with everything going on with inflation and the increased price of energy. As I mentioned earlier, we did see quite a rollover in oil this week, and we really have been holding to these support levels. It's really impressive how the price of oil is holding pretty tight to these areas. We did push up close to that 120 per barrel. We were holding over it for a couple days, and then we had the sell-off, and we were able to capitalize on this sell-off that I'll show you here in a minute. But came right down to this 93.67 area, right around the 200 simple moving average, pushed down below it a bit on Thursday, but a lot of buying pressure down there in that area, pushed it right back up. Looks like we closed on Friday right around 97.59 per barrel for light crude. And, that $100 area is going to be very important, but we're going to be keeping an eye on this. As, of course, President Biden went to Saudi Arabia to talk to them to see if they would release some more supplies. That, of course, would affect the price of oil. Now, the Saudis have said they aren't going to do that. We'll have to see what they actually do, but, that is something we're definitely keeping an eye on. Gold has been slipping pretty much all week, and that kind of correlates, honestly, with the strength in the dollar. It's one of those things where, when the dollar is incredibly strong, gold is going to look a little bit weaker when compared to the price of the dollar, because if your dollar is stronger, that means that it can buy more gold per ounce. But still, quite the rollover here in gold. We still haven't gotten down to that 1680 support level that we have marked here. We'll have to see if it makes it down there, but it has been stuck in this channel for well over a year and a half. Let's see, yeah, right back here in May of 20, June of 20, so over 2 years now, that we have really been just kind of range bound on gold between these two areas. Now, don't have any positions in gold right now. We're not recommending that you get into gold, but it is something that we keep an eye on, just to keep an eye on how things are behaving. Speaking of things that are misbehaving, Bitcoin has really just been in the doldrums lately, and it hasn't really done much. This 20,000 area has been incredibly crucial for Bitcoin, and we can't seem to get a clean break below it. We just kind of hang around it, and honestly, we're just consolidating right on this 20,000 right now. And, obviously the last couple days we've been pushing back up, but look at that. It's just this beautiful sine wave right here that is just hanging around that 20,000 mark, and doesn't want to do anything. Bitcoin's still in a massive downtrend. It's going to take some push to get it back up there towards that 69,000 where it hit its highs on, looks like, November 10th of last year. It's been pretty much a bloodbath ever since. So something to keep on as far as crypto, if that's your thing. Now, a couple of plays that we took this week. First one was short on USO. Let me pull up the actual alert so I can give you the correct date. So that was the 12th, and beautiful little short on this one. We got out of this one in about a day. If I'm looking at it in at 74.75, we're able to capitalize on the flush. Got out quickly for profit. That's an easy little short there. The other one was Tesla. Riz loves shorting Tesla, I'll tell you that. In on the 13th. And let's see here. When did we get in? We got in at 721. So pretty nice entry on that short on Tesla. And again, out the next day for profit. Easy little flip on that one off that little flush off of Tesla before it started to rebound on Thursday and Friday. So really, really easy little quick trades there that if you were part of Elite, you were privy to and you were able to get in on that if you can short and you were able to capitalize. Now, of course, there were a lot of other plays that we made this week, but those are for our Elite members. And so, you know, when we have that chance to reopen up Elite, I'd recommend if you're watching this replay on YouTube and not an Elite member, you definitely capitalize on that. So make sure you're doing that. I want to go ahead and open it up to questions, And David has already posted a question. He says, how do I feel about the healthcare sector? Well, let's go ahead and take a look here at what healthcare has been doing. You know, it definitely is outperforming the market right now. Healthcare, of course, represented here by XLV. And it's not too exciting. You know, in my opinion, I don't really see a whole lot of movement in healthcare right now. It really just seems to be consolidating as far as a whole. You know, there's obviously, you know, we've been recovering since the whole thing in 2020, that if I say the name here on YouTube, it will get us flagged. So I'm not going to do that. But, you know, the thing that happened is already done, in my opinion. And healthcare is just kind of hanging out. Really not too much to talk about, in my opinion. I don't really like it at this point. There's not really a whole lot that I would like for a long play. Now, of course, you could speculate on healthcare making a push back up, but I don't see anything, you know, too exciting as far as that going. Now, as far as earnings plays, that could be something completely different. If you're, you know, you have something specific that you're looking at, we can always take a, you know, a closer look at that specific security as opposed to just healthcare in general. But yeah, you know, healthcare really just not doing all that much this year, and I don't know if it's really going to get much of a push unless the market goes with it. So if we do see continued upward movement here on the S&P 500, let me put it back up, you know, and we do push through this 3,900 level, then, you know, things start looking a bit better. But do understand, we are still in a downtrend. Here's the long-term downtrend right now with that blue line. But, you know, I talked about this last week. We're still in a downtrend here as well. And, you know, unless we can break through and make a new high, preferably over, you know, about 3,950 and hold over it, then, you know, it's not looking so hot on the market. Now, you could be like, but Chris, it looks like we have an uptrend here. And you are correct. We do. But overall sentiment right now in the market is down. It's a bearish market right now. And I think you'll see that a lot in the trade alerts that we send and things of that nature. Now, of course, there are times where you can capitalize on these little bounces, but they're really kind of quick in and out type of thing. And I'll answer this question by Nick, and then Dylan, I'll get to your question. So Nick says, have the markets already reacted to the possibility of a recession? If the next GDP numbers confirm it, what can you expect the markets to do? In my opinion, I don't think the markets have priced in a full-blown recession yet. Now, I mean, of course, there's always a question of how bad is it? You know, it's one of those things like, okay, yeah, we expected a recession, but it's not as bad as we thought, so we'll start buying. It's kind of one of those things. Now, if the next GDP number is really bad, I think the markets will react negatively to that, you know, print. But if it's just, you know, if it's hanging close to zero, because if I recall, the last GDP print was really close to the 0% area. Now, obviously, that's bad, you know, for the economy as a whole, but you know, if it's not super bad, like if we're not looking at like -1%, -2%, or even more, then it may be a case where the market's like, well, yeah, it's a recession, but it's not like a super bad recession because it's kind of like the mega pint, right? You know, it's better than a pint. It's not a mega recession. It's just like a, you know, a regular recession. So, of course, I'm joking. You know, a recession is a recession, in my opinion. Honestly, my thoughts, no, I don't think the market has priced in a recession yet, especially with this upward movement. If we saw a continued downwards movement past 3,600, at that point, I would say, yeah, probably the markets are expecting a negative GDP print, and if earnings are bad, that'll only fuel more of a sell-off. But right now, honestly, we've just been kind of hanging out here between this 37 and 39, 100 levels on the S&P 500 on the market itself. And so I think everybody's kind of in a let's wait and see move. It's like they're like, let's wait and see what the numbers are. What's the CPI numbers? And I was thoroughly surprised on Thursday that we got this buying pressure from down here. I did not expect that at all. So it's tough right now. It's really tough to get a clear direction on the market other than it looks like it's going down, but we have these intermittent ups and downs. Is really kind of where we're going. So I think there's definitely more downside if we get a negative GDP print and a recession is confirmed. I think that will be a negative catalyst, but who knows what everyone else will say and how they'll feel about it. And if it's to the point where it's like, okay, yeah, it's just like a light recession light, kind of like Coors Light, then it could be where people buy into it, expecting it to rebound because it wasn't as bad as they thought. So, but yeah, short answer, no, I don't think the markets have priced in recession. But if it's not super bad, I think that it could be okay. Now, Dylan wants me to take a look at Amazon. So a post-split on Amazon has not been overly inspiring. I know a lot of people were expecting a really big buying push on Amazon after this because, well, it's affordable now. It's $100 and it's not $2,000 per share. Honestly, Amazon really hasn't been doing all that much, and it's a little bit frustrating. I know, some people got in on this, but we kind of found a floor right here around 101, we'll just call it 100, and we've really just been kind of consolidating post-split. Of course, there was this big sell-off here pre-split as the market kind of tanked quite a bit. Had a bit of a rebound, buying pressure into the split. After the split, it sold off really, really hardcore. And, maybe that's just people offloading their shares, looking to buy in at a better price, and they may have been able to do that. Let me get my little trend line thingy here. We are seeming to make higher lows right now on it, and that's definitely a good thing, but it is also a slight downtrend as well. So, yes, we have a wedge. Okay, that doesn't mean jack, just so you guys know, but it is something to look at as we're basically having conflicting information right now with the direction for Amazon. So I would say if we can break out over this upward trend line, I think the uptrend will be confirmed at that point, and then we should be good to go. If it breaks down below 100, I think that's definitely bad for it. But overall, I would say even though the market is been having a rough go at it, Amazon has been able to hold where it's at. Earnings coming up here looks at like the end of July, the 28th. So that will be interesting to see, how the big boy, the number one online retailer does with everything going on with, inflation and, price increases and things like that, how they fare, because I think that'll give us an overall signal for what online retailers are looking at as far as, earnings for the last quarter are going to be concerned. Yeah, of course, there's Prime Day sales as well. That was the other day, and that may help push it up, but I don't know if those sales numbers will be put on this earnings report or not. In theory, they should, but you never know. So it's definitely something to consider. And, of course, Amazon is going to be just fine. I'm pretty sure Bezos is not going to let it tank, so we should be good. Nick wants to know about AMD. Well, we love AMD here. The computer I'm running this off of is run off an AMD CPU. So AMD looks to have found a floor here right around 74, and if I'm not mistaken, yeah, that's historical support. So that is held pretty solid in my opinion, and looks to be curling towards the upside. But still, understand that we are in a major downtrend on AMD. So if you're looking to get into this, I would swing it. I would not necessarily long-term hold it. Looks like we got earnings coming up on the 22nd, so a little over a week. If not, no, it'll be next week, because math on stream is hard. Yeah, it's next Friday. Definitely looking like people might be buying into this pre-earnings, expecting earnings to be good. Obviously, earnings have been very good for AMD for the last, years worth of earnings reports. So, it looks, earnings are good, but the market is pushing it down. Is really what it comes down to. Now, of course, the semiconductor shortage is going to be an issue. I think that's affecting all tech companies at this point. And that is something to be concerned with. And that's why I'm a little hesitant to, long-term this thing. So if you want to swing it and see if we can continue to get some upward momentum here moving into earnings, that could be a quick swing trade you could make. I'm not recommending you take that. Honestly, when I talk about taking positions here on, this webinar, I'm not recommending you take any positions because you need to do your own research, and I don't want anybody to construe what I'm suggesting as financial advice to all of our YouTube overlords who are listening to this. But definitely looks like it is curling up here. I wouldn't be opposed to taking this myself. If I were going to get into a trade like this, and I could definitely see making a quick swing trade into earnings if the buying pressure continues towards the upside. Dylan wants us to take a look at Meta, aka Facebook. I guess it is now Meta. They changed their ticker. I'm not overly excited about this. Obviously, they got hammered post earnings or 2 earnings seasons ago, and that was a beating, to say the least. Now, we did get a little bump here on their next earnings. How bad was this one? Yeah, it was pretty bad. Still positive, but it was a pretty sizable miss as far as that's concerned. But they beat earnings here, so that's good, but revenue was down. So let's see. Also reporting on Friday, it seems here, the period ends. Oh, so it's the 27th. I was misreading that before. So the 27th is a week after next, a week from Wednesday. So yeah, we definitely seem to have kind of found a floor, but man, Facebook, aka Meta, now has really been getting slammed, with this whole downturn in the market. And honestly, I kind of worry about Facebook. I'm going to call it Facebook. I know it's Meta, but it'll always be Facebook to me. I'm a little worried about it because they didn't really see the push that they were looking for off of, the whole switch to this Meta concept. There hasn't been any type of movement in the metaverse, in my opinion, and it's just kind of hanging out here around the support right around 155. Seems to be kind of this area that's holding it up. Earnings could definitely help it. If you want to take a speculative position into earnings, you definitely could, but there is definitely more downside to this, and don't kid yourself and think that there isn't. Let's see here, just a few historical technical spots right about there and right about there. So, there's definitely more downside potential. Now, of course, there's upside potential as well, but we got a lot of stuff we got to get through. We got multiple moving averages that are just crashing and pushing this thing down, and really just kind of consolidating here on support. If the market decides to roll over, or obviously if the GDP numbers are bad and we get a rollover, it's going to take Meta with it. Tech companies have been absolutely demolished this year. As you can see, it's the worst performing sector right now of the ones that we monitor, down almost 25%. Now, you could look at that two ways. You can look at it and be like, okay, well, that gives you a massive buying opportunity. And you're absolutely right if you would say that. It is a massive buying opportunity, depending on your time horizon. Long term, I think, Meta is going to be okay, but it's a question of, can they, start getting more subscribers, more active users and advertisers and things like that nature on Facebook, Instagram, that sort of thing. Obviously, they're one of the top social media platforms, but there are new ones coming out. You look at how fast TikTok took off. Not going to get into any of the political stuff surrounding Meta, around TikTok, that is. But you look at these new ones, and I see innovation in those platforms where I'm not seeing as much innovation in, Meta itself. So if maybe they're going to come out with something here soon that'll help kind of push things back, push more users back into Facebook, Instagram, that sort of thing. But right now, for me, at least on these platforms, all I'm seeing is more of the same. And that can work well for a while, but at some point you have to innovate. You have to make something new. You have to keep people engaged. And without that engagement, they're going to go somewhere else that is, more accessible to the ADD generation, which is why I think TikTok has gone as hot as it has. And so that's just kind of something to keep an eye on as far as that's concerned. If we stay over this 155 area, I'd feel pretty confident in it. But with earnings coming up in about a week and a half, it is something to just be aware of. and be careful with it. If you're in it already, I don't see a point in dumping it. Even if you got in, up here in this 200 area, I still wouldn't be too concerned with it. Obviously, the market conditions right now are pushing it down even more. So even if earnings are good, it may not be enough push to get you back where you might be break even if you got in on one of our alerts back here. But again, solid company. I don't think Zuckerberg's going to run it into the ground, and it should be just fine. They're doing just fine as far as that's concerned. But I'd like to see something new out of them, honestly. It's been a while since we've seen much new anything out of Facebook and Instagram and all those different companies that they owned, Oculus. And we haven't really seen that whole metaverse come to fruition. So maybe that's something they're working on and they want to tell us later, but we'll have to wait and see. Oops, sorry about that. How do I feel about JPM? Well, let's take a look at it. Generally, with financial things, I typically stay away, but I will say, even with an earnings miss here, they seem to be doing pretty well for themselves. A lot of buying into that, but honestly, it just bought back to where it was. So obviously, the people who are in JP Morgan feel that it should be around this area, this 112 right now, and they bought back up into it and, probably did pretty well for them. Let me see here. Oh, my volume bars got taken off. That's unfortunate. I'll get those back later. But in any case, I'm not a huge fan of getting into financials. Not my favorite bank at all, especially with everything going on. Different types of scoring systems for rating investments and things like that are being used that I don't necessarily agree with. So myself personally, I wouldn't invest in JP Morgan Chase, but that's my personal thing. From a technical side, let's look here. Let's see, where do we bounce? Yeah, there seems to be some technical significance in that bounce area. So definitely some support there around that 106, though it seems that we got a pretty big move. If we get a push upwards in the market on Monday, I think we could definitely see JP Morgan continue. But honestly, it's really been kind of following this 50 moving average incredibly closely lately. It does seem to kind of push over it, and then it comes right back down. So just keep an eye on that. If we see a solid push over it and maybe try and make a run for the 100, that could be interesting. But yeah, financials are one of those things that move typically pretty slowly. Now, obviously this one gaps and moves a little bit, but not huge moves like something like Tesla or even AMD, in my opinion. So it's something you can work on, but with this negative earnings report, I would be a little leery of jumping in on this one. It seems like a pretty significant miss, almost by 5% on both earnings. The EPS was definitely almost a 5% and missed by about 3.6% here on revenue. Now, of course, woe is me. They only made 30 billion as opposed to 31, but still, it is a miss, and people will look at that and see that it looks like they missed back here on last quarter as well. So yeah, a couple bad earnings reports, but obviously market conditions will help that, or hurt that rather. So we'll have to see. Me personally, I wouldn't take it, but if this is a setup that you like, definitely could be worthwhile. Yes, PayPal. That's a bit of a bummer. So the question is, can we take a look at PayPal? Sure. PayPal, again, just in the doldrums right now. After the, proposed talks of acquisitions and things of that nature, PayPal has been in an absolutely terrible position and just rolling over. Now, I know a lot of our members are in PayPal long and they've been holding it for a while, and they're like, when's it going to come back? It's a good question. I will say we're holding this area here around this 68 area, which is a good sign as long as we can continue to maintain that. However, we are going to need a solid push over the moving averages before we start seeing a recovery. And honestly, we're going to need a push in the market as well. Without the market, it's going to be hard for stocks like this, especially PayPal, which, is in the tech sector that has been getting absolutely wrecked lately. It's going to be tough for these securities to make those moves that you need to get back to the point where you break even. It's a bag hold. I understand, if you got into it when we got into it before, I can understand your frustration, especially, with positive earnings reports here, and you're like, why is it not going? Because the sector itself is beat down. And when a sector like this is just beat down, it's very hard to get solid moves out of it until the entire sector starts to recover. But like I said, we are holding right now. It's not continuing to sell off, and that is a positive sign. Now, you could have said, well, Chris, it was doing the same thing here. And you're right, it was. And then we got the break lower. So the question is, which direction does it break? It's one of those things that I can't tell you what's going to happen. No one can tell you what's going to happen. But if it does break to the upside, you should be in good shape. Earnings coming up here, looks like at the beginning of next month, on August 2nd, excuse me. So that could definitely be good. But yeah, PayPal really just kind of sucking right now. And it sucks when you have to bag hold something like this. But again, solid payment company, not going anywhere. So it's one of those things you're just going to have to kind of expand your time horizon on a little bit. Yeah, it really is close to that 50-day moving average, and it has been holding pretty tight to that ever since we got this, ever since it got wrecked, for lack of a better term. It really hasn't been able to push through the 50. We got one push here, but it quickly sold back off and got underneath it. I need to see a big solid push over the 50 and a hold over it before we can say, like, okay, PayPal's back, let's go. But again, if you're in it already, just chill. Continue to hold and leave it be, because sometimes you just got to hold and be a little bit stubborn about it. Hey, no problem, David. You take it easy. And I think we're going to go ahead and probably call it a night. We've been at this for over half an hour. I value your time just as much as you value mine. I want to thank everybody for coming out this evening. Great questions, great things to look at. Of course, keep an eye on things going up here in the next couple days. Obviously, earnings season is starting back up, and that can have the power to push the market one direction or another. So if, earnings season is looking pretty bleak on some of the bigger names, we could see potential more downside in the market. But if things are better than we expected as far as earnings are concerned, we might see a bit of a boost, and we push over this 3,900 level, and hold over it, and be able to push through that 50 moving average. I think we could see some more upside and maybe see 4,000, as a next hit in the S&P 500. So keep an eye on that moving forward. Of course, all of our elite members will get that alerted to them immediately through Riz Elite. Really appreciate all of our elite members, and if you're not a member, make sure you get in the next time we reopen membership. But until then, we will see you in the market on Monday.